Hello, Maverick Traders. It is Friday again. It is the trading room. Let's go ahead and jump into it. Last week we had a big week. We had pretty much a continuation of the Great Rotation. Now look, I haven't heard anyone call it this, so I'm going to name it the Great Rotation, meaning that all the things that had worked earlier in the year, and that really talking about tech stocks, communication services stocks, it's been a fairly narrow market this year, and they've all been up like 40%. And now we're starting to see those get absolutely crushed. But we're seeing the normal stock market. And again, when I say normal stocks, I'm just talking about your regular stocks, ones that aren't working on AI, ones that aren't working on technology or communication services, just regular companies. They were fine. We got lots of economic news. We're going to cover that here in a bit, but the odds of a rate cut are now even higher. So the odds for a September rate cut are 88%. There was a Fed meeting this week, and I think they're going to cut rates. I've said that for the last couple weeks. The market completely disagrees with me. I think they're only putting like a 5% chance of a cut this week. I still think it's going to be a cut, but look, I'm a betting man, and that's a bad bet if you follow my advice. The market is way smarter than me, way smarter, so there's most likely not going to be a cut. Even if I'm right and there is a cut, guess what? It doesn't matter. All it means is we don't get the cut in September that was pretty much a 100% chance we were going to get. We just got it 6 weeks early. It's not really that big of a deal. We also have second quarter earnings going on right now, and I just want to draw up the difference between the two groups. So positive this week, stuff like IBM Old Tech, GE, Lockheed Martin. These things had great reports, great runs. And then if we take a look at the out of favor tech stocks, we had Google, we had Tesla, we had things like NXPI Semiconductor. They all got crushed. This is what's happening. The average stock is doing just fine. Last week, we had just a few things I want to talk about. First, I want to be talking about this advanced GDP. This number was amazing. If I had to write a news report and just make up an advanced GDP number, I couldn't have made up a better story. 2.8% GDP, not too hot, not like 3.5%, 4%, 5%, 2.8%. And the inflation part of it was weaker than expected. This was like the perfect report, and the market loved it for about the first half of the day. And then the sellers came in and slammed it down. Again, the tech stocks rolled over, led the way even lower, and we closed near our lows. Then on Friday, we got the core PCE price index. Came in as expected. So the market liked it, and so we did get a little bit of a bounce back on Friday. That being said, we did close well off our highs as well. We'll be taking a look at the charts because I don't think we're quite done going down yet. So let's take a look at the final numbers for last week. We have the Dow Jones was up, the S&P was down. The NASDAQ was down, the Russell was up. I mean, take a look at these numbers. You do not see this kind of price action very often, to where we have the Qs down another 2.5%. They were down almost 5% last week, and they are almost at 10% off their highs. So this is almost a correction at this point. Russell doing great. S&P doing just fine when you take out all of the tech stocks in it. We're going to take a look at the S&P chart, and we're going to take a look at the Qs. Then we're going to take a look at some of the other indices, just to really get a good idea what's going on. Now, this is the S&P 500, and 7 stocks comprise about 31% of the weighting in this average, or in this index. Whatever happens to those 7 stocks is very important. We've seen the sell-off in these stocks, and I really want to focus on the candles over the last 2 days. If you listened to my video on Thursday, I talked about how at one point, Thursday's candle was all the way up to the high. It would have been a big green candle with a lower wick. It would have been a great reversal candle. The problem is, it was the exact opposite. we ran up and lost all of our gains and closed near our lows. This candle on Friday, we gapped up and we actually had a green candle. So it is a green candle. That is the good news about this. The problem is, look where the wick is. It's an upper wick. So we ran up, and then by the end of the day, we had lost momentum. This is not what you really like to see. We like to see, nice expanded range candles on these pullbacks. This is not bottoming price action. It's not. Look, the market could easily go up next week, and looking back on it, we'd say, oh, this was just one of those times it didn't work. But I'm telling you, this is not great bottoming price action. I'm going to show you what good bottoming price action looks like, and it's not in the S&P, and it's not in the Qs. So here we have the Qs. We have broken down. Okay, Friday we got a doji. Okay, look, that's fine. That's fine. If we get a big green candle on Monday, I'll say, okay, you know what? That is a tradable bottom. We're probably going to have a couple days rally, but we've got some overhead resistance, moving averages, all this stuff to get through before we can get back to being bullish. This is not great price action. So this is the S&P and the Qs, but now I want to get into things like the RSP, the equal weighted S&P 500. So it takes those 7 stocks and make them the same weighting as all the others. All of a sudden you can see this is a really good candle. That is a nice solid candle. We got a pullback. Yes, we pulled back a little bit. This is a decent candle. So I think when you take a look at this chart, you say, hey, you know what? That's a decent looking pullback. We pulled back right to the level. I can't say that Thursday's candle's the greatest reversal candle. I would have loved to just flip that upside down and have a long lower shadow, but the follow-through is much better. And then we come over here and take a look at the Russell 2000, and you can see it didn't even pull back. It just based. And here we are knocking at the top of the base. These candles are so much better. It really leads you to realize what this market is doing. There is strength underneath this market, and I've been talking about it. I'm not trying to sugarcoat what's happening in the high-tech sector and communication services. It is a disaster. It is in free fall. It is ugly. And if you are in those sectors long, it is painful. But we've been talking about this for the last 3 weeks. 3 weeks ago, I said, hey, be wary of high-tech stocks. You want to be rotating into normal, I'm air quoting here, normal kind of stocks. If you did that, you know what? There's a lot of green in this chart here. This is for the week. And look at all the red here. It's just a few names. Take a look at the rest of the market. It's actually doing just okay. So here we are. We can't ignore the overall drop in the S&P and the Qs. They don't look great. Friday's action was a little bounce, and weekends are always where people sit back, they calm down, they say, okay, what do I want to do on Monday? Monday is a very important candle. If Monday is another green candle, I think the little bit of a panic is over, and we can go back to a lower volatility environment where people are a little bit less scared. If we get a red candle on Monday, it means we have not hit our lows yet and that there's more to come in selling. The regular boring stocks, they look okay. Here's the question, and I don't know the answer to it, so I'll just put the question out there. If the selling gets so bad in tech, it's going to drag the whole market down. Even the RSP and the Russell are going to get dragged down because of it. However, if the Qs stabilize and maybe even get a little bit of buying, then can the rest of the market pull things up? That is the question. I don't know the answer to it. Nobody does. We all can have opinions. We all can say this is what is likely. But I think that is the big struggle in this market right now is Are the Qs going to drag the rest of the market that's doing pretty well right now down? Or is the rest of the market so strong that they can keep going up, and then the Qs will just probably go along with the rally because, all the money going into ETFs? I don't know the answer. No one does. I personally think, again, this is my opinion, I think we get more selling for the first couple of days of next week. We do have the Fed meeting on Wednesday. We could get some more selling off of that. But I think the key to this week is earnings. Last week, we had high-tech earnings that were not very good. They were taken out and punished. They were the more, let's call them speculative kind of names. This week, we get things like Microsoft, Apple. Now, I'm not saying these are not speculative, but they are less than like a Google or a Tesla. So we get Microsoft. I don't really want to put Meta in the same group because Meta is spending a lot on AI. But when you take a look at this, Microsoft, Meta, Apple, Amazon, these are the companies that are probably going to report decent earnings. We'll have to see what the market thinks about them. But I think that these earnings reports are going to be more solid than the ones that we've had so far, and possibly put tech back on solid ground. That is just total speculation on my part. We'll have to wait and see what happens. But I think we have more downside to go. But I think by the end of the week, I think we might see a tradable bottom somewhere in tech. For the rest of the market, I think it does okay. I think it hangs in there, goes sideways, slightly up, slightly down. I just don't see there's a lot to worry about in the rest of the market. Next week, big week, first week of the month. So we're going to get things like the JOLTS. We're going to get things like ISM manufacturing. And we're also going to get the jobs report on Friday. Sandwiched in between those things, we've got the FOMC. Okay, so the FOMC on Wednesday, they're widely expected to hold rates at 5.5%, but pretty much signal to the market that the next meeting will be a cut. We'll see what happens. I think that the press conference at 2:30 is probably more important than the rate statement itself. I think the market wants to know how many cuts is it going to get. Is it going to get just one, or is it going to get maybe two or three? I think that's going to be what's going to be moving the market going forward. Looking at the technicals, I'm putting us at a negative 0.5. Are we above the 50-day moving average? Are we below it? We're kind of on it. We didn't have a great bounce off of it. I'm putting it at, basically a 0, but just shaded a little bit. If we get a red candle on Monday, there's no doubt that it's a -1, maybe even a -2 at that point. So realize that this score, if we get a little bounce, it doesn't really improve. If we get a red candle, it actually really gets a lot worse. Let's go ahead and take a look at the sectors, because that is the key to this market. If you've been doing this correctly, you've been in the right place. Last week, we had 5 sectors that were at +2 or +3. Those sectors, let me tell you what those sectors were. They were financials, industrials, real estate, healthcare. So look at that. 4 of those were in there, but we did have consumer was at a +2, but it had just been downgraded from a +3. So we know that when they're downgraded, they are weakening. But this is where you want to be. If you were in these sectors on the long side, you were great. And then we had technology and comm services were the weakest sectors last week. And you can see they performed the worst. Let's go through and update all the scores here on the sectors. We have utilities. Last week it was at a 0. We moved to a +1, mildly bullish. Not too excited about it, but just mildly bullish. Here is the communication services sector. We have been moving from a +3 to a +2 to a 0 last week, and you can see absolute failure here. Did have a decent bounce on Friday. This is a decent bounce. but this has moved down to a -2. So this is a bearish sector here. Real estate, we are at a +3. Guess what? We're still at a +3. It looks great. High basing. That's a beautiful looking chart there in the real estate sector. Next up was healthcare. Healthcare was at a +2 last week. Hey, this is perfectly fine price action. That's quite bullish price action. +2 on healthcare. We were at a +2 in industrials last week. We remain at a +2. Now, it did have a bigger pullback than some of the other things, but look at the candle on Friday. We were able to go up above the previous high. Yes, we have a long upper shadow. If we do get a red candle on Monday, Tuesday, then yes, this probably sinks back down. But relative to everything else, it looks good. Here is financials. Financials had a pullback. Solid candle on Friday to where we opened at the low and closed really close to our high. That's a really good looking candle here. Come over here to consumer. Now this was our +2. We had downgraded from a +3 to a +2. We're downgrading it to a 0. It's barely holding on. This one is going the wrong way, so it is not strengthening or staying strong. It is weakening down to a 0. We had tech, was downgraded from a +3 to a +1 to a 0. And now it's going to a -2. And I want to point out the candles here are not good. Look at the candles on this bounce. This is not bouncing price action. This is not typically what you see. This is some pretty weak price action. Again, a green candle, a big green candle, open at the low, close at the high on Monday is going to make it to where, okay, this is probably a pivot point, a tradable bottom. We're probably going to continue to rise for a couple of days. But then again, we run into all this overhead resistance that we need to get through before we can become bullish again in tech. In the material sector, we were at a +1 last week. We're at a +1. Great looking candle on Friday. That's a solid looking candle off of a finding support. Energy, we were at a +1 last week. We're staying at a +1. For me, this is the sector that I want to be the most sideways on. This is really just range bound here. Range bound to maybe a touch bullish, but that's it. We take a look at where we were last week. This is where we were last week. So comm services, tech, utilities were the weakest sectors. And real estate, financials, industrials, healthcare, consumer were the strongest sectors. And we saw that all of these sectors except for consumer held in. And then pretty much all of these didn't go higher. They actually went lower. We did get a bump up of utilities from a 0 to a +1, but everything else weakened quite a bit. This is where we are. No question of where the strength and weakness is. If you are focused on the strong sectors, if that's where you've been putting your trades for the last week or two, I'm not saying you're doing great, okay? I know that some of these sectors have just been not going down, and some of the trades have just been hanging out. But at least you're not here. Here is so much pain right now that it's crazy. If you've been in short in these sectors, you've been rewarded quite nicely. Let's take a look at our trade slots. And these are the trades that rolled off. We only had 3 trades that rolled off. We had a +3 in real estate that did not work out. It wasn't a total max loss, but it was pretty darn close to it on AGNC. We hit a really nice trade on DuPont. DuPont was about a break even. We had a +1 trade on, ended up being about break even. But our trade, our Hess Energy trade in energy was pretty much nailed it. Nailed it right at the 150 butterfly. That's what we had. Absolutely nailed it. One not quite max loss. We have a break even, and then we have pretty close to a max gain. You know, like I said, if you're in the right stuff, you're either making a little bit, holding in there, losing a little bit. That's just where you need to be. We have determined we're at a 0. So 0 it is for our allocations. Our allocations say you should have no +3s, or you should be adding no +3s. You should be adding no -3s. And these are the trades that you're allowed, 2, 3, 5, 3, 2. Let's take a look at where we are right now. The ones in the black are trades that are currently on, and the ones in green are the trades that we're going to look to be adding. So we want to get a little bit more bearish. Remember, we only had one trade that was bearish from last week. We're going to want to be adding in some of that bearish. We're going to add in a bearish comm services and a bearish consumer to -2. We're going to be adding on 2 neutrals, and that's going to get us to where this final number here, as you can see, we're still leaning a little bit bullish, but not much. I mean, just a touch bullish. And then over the next week or two, a lot of these are going to roll off. So if we keep weakening, it's going to look really nicely on the downside. So we got 4 trades this week. Let's go ahead and take a look at them. First is in comm services. We have a neutral there, PARA, and that's looking okay. It's still right there within our butterfly window, but we want to get more short. We want to find something that was weak anyway and looking to stay weak. Here we come across Disney. What we want to do, we want to find a stock, again, this is for a -1, meaning this thing doesn't need to crash. We don't need to be in Netflix. We don't need to be in Nvidia, catching a 100-point down move. That's not what we're looking for with a -1. We're just looking for something that stays down. Even if the market rallies, we want this to just stay down. And it looks like Disney is the one. It's been down for a while, and you can see that in the good days, there's been no bouncing. When the markets have been okay going up, there's been no bounce. When the markets go down, it follows it down. So here we are, we're just low basing here. So the question is, what is the trade? Looking at the August 9th, 90.87. 90.87 bear put spread. This thing just needs to go down a little bit. We're going to get a nice little gain out of that. If you want to get more aggressive, you could go out to the August 16th, look at the 92.87 bear put spread. Right, the other sector we wanted to get more short in was consumer on a -2. So this here is Li Automotive. Now this is a Chinese EV car company. And over here, this was the news of tariffs. The Biden administration put tariffs on EVs coming out of China. And you can see since that time, it has been down and cannot get up. Big question here is this going to weaken now? We're in this base. We're pretty much in the middle of the base. We're just saying we think this thing is going to continue down. The rest of the market is going to stay weak. And we could think we can make some money off this on a -2. So the -2 trade is going to be the August 16th, 2017 put spread. So that means that we want this to be down below 17. So we're going to need this thing to come down and break through the support. If that happens by the 16th, that's going to be a very nice gain on this. And of course, if it goes up, it doesn't matter past 20, that's going to be our max loss point on LI Automotive. We're looking in the materials and energy sector. First one I want to talk about is Freeport-McMoRan. Now I wanted to do a bigger chart here to really show you where the stock is in its current range. As you can see here, we broke out above this resistance here at about 43.50, and we traded all the way up to 54. We came down, I guess you could say, all right, head and shoulders pattern. And here we are back down to the support, and we're getting a little bit of a bounce off that. The play on this is that, okay, it's moved down, it's found the support level. It's probably going to hang out in this area for a little bit before it breaks down. Decent place for a butterfly. We're looking at a fairly short term, 2 weeks long, the August 9th, 43, 47, 50 butterfly. That's going to put us right in this area. So 43, 47, 50 butterfly. This is where we think the range is going to be. And of course, 47 is our midpoint. So we want it to be closer to 47 than anything else. As you can see, this is a slightly bullish butterfly. This is a butterfly, but leaning a little bit to the bullish side. So this is like a plus 0.5. Not a +1, but like a plus 0.5. If this thing drifts a little higher, it's going to be drifting right into our profit window. The other sideways play we want to make is on energy. Here is British Petroleum. Pretty much the same kind of setup where we've had this really great area of support back here. We took off, we ran up, we fell apart, and here we are right back down into this range, and we found some really good support right at this 34 area. It's really same play here where we're saying, okay, this thing is probably not going to break down. It always can break down, but it could. Short-term play, this is the one I'm looking to do, the 34, 35, 36. So that one's going to be pretty much spot on, meaning this is truly a zero, not leaning one way or the other. I think if you want to go out to the 9th, I think you tilt it a little bit bullish. So you're just leaning a little bit bullish, saying, hey, we think it's going to rise up into this 36 area. That's going to be the max gain point on this. So that one would also be like a plus 0.5. Not, just still a butterfly, but still leaning a little bit one way on the bullish side. Because those sectors are at +1s. The materials and the energy sector are at +1. So if you are looking to lean one way or the other, I think it makes sense to lean a little bit bullish in those sectors. Those are the 4 trades I've got to share with you. If you want to share some other trades with the rest of the Maverick group, go to our website, log into the members area. We love to see our traders chatting together and talking and sharing trade ideas. Let's wrap this up. The growth rotation likely to continue. Now look, I'm calling it the great rotation. I'm pretty sure that you're probably going to be hearing people call it that if it goes on any further. But I wanted to name it first. I think it's likely to continue. The same thing we've seen, likely going to continue. And for any of you who say, but Rob, it can't keep going. Do you remember how long it was where the Mag 7 kept going up and up and up and up and the rest of the market just kind of hung out and did nothing? We had that for months. And really the whole month of June was exactly that. The RSP was going lower. The RSP was flat. The Russell was going a little bit lower, but yet the Qs were making all-time highs along with the spiders. It happened for a complete month, and really it happened for the first 6 months of the year. I don't see any reason why we can't have the exact same thing happen for the second 6 months of the year. I don't see any reason why we don't see this continue. Let me stress this as much as I possibly can. The sectors are the key to trading this market. This can be a difficult market. If you are doing what's called bottom up, where you're like, hey, I'm going to trade Tesla, I'm going to trade this, I'm going to trade Costco, I'm going to trade Lilly, I'm going to trade this, you're running into a headwind. That's all you're doing is you're getting killed, and you don't understand why. It's because you aren't seeing the intricacies of where the money's going. If you've been using the sectors and you've been allocating bullish money to bullish sectors and bearish money to bearish sectors, you've done all right. And look, and if you haven't done all right, you've been hanging in there, waiting for these things to really develop. Stick with the sectors. Stick with this great unwinding. I know you think, okay, it can't last forever. We don't know how long it's going to last, but this is trend following. You follow the trend until it's over, trusting that it's going to last way longer than you thought it was going to. That's what happens in trend trading. It just keeps going on way past the part where you say, hey, I didn't think it was going to go this far. Just trust in the analysis. Trust in trend trading. Everyone have a great weekend. Take care. Be safe. We'll see you next week. Goodbye, everyone.